This is the Capital Flow platform. We're talking about options flow. As y'all probably already know, Capital Flow is my personal options flow service. So this class is not going to be just kind of me promoting Capital Flow. I'm just talking about flow in general. So of course I'll be using Capital Flow. The things that I'm teaching can be applied to different flow platforms. There's a few of them out there. I've used pretty much all the major ones throughout the past few years. I've been trading with Flow even before I had my own service. And there's some things I liked about certain ones, some things I didn't like about certain ones. But overall, I can't say that I found a platform that really fit me, and not just fit me, but I felt like was kind of tailored towards everybody. A lot of them I feel are kind of tailored towards certain trading styles, or maybe you have to already have a certain amount of experience in the market. And that's one of the reasons why I created Capital Flow, is I just kind of took pain points from other platforms and was able to make one that I feel like is great. Again, not just for me personally, but just in general, an overall great flow platform. But again, this is not just straight a Capital Flow endorsement, but obviously this is mine. I personally use this every day. I talk about it, but I don't just want to put it out there to you. Like, I use this. This has really helped me improve my win percentage throughout the market. I've been using Capital Flow specifically since January of last year. So going on couple years now. So I really like it, and I hope you all will too. So that being said, let's get into it. So first, we want to talk about what is flow. What is options flow? So options flow is tracking trades across the stock market from your hedge funds, your institutions, your multimillionaires, wealthy individuals, people or institutions that have access to millions of dollars, right? The people that are trading with 7 figures, 8 figures, even 9 figures. And it's showing you what they're buying and when they're buying it. And that's useful because you get to do what's called following the smart money. So there's a lot of kind of nicknames for people that trade with millions of dollars. Some people call them whales, they call them big money, they call them smart money. But at the end of the day, it's all the same thing. It's people that have access to large amounts of money, large enough to actually move and affect the market. And you can call them smart money because typically they have information, access to information that the general public does not. They know things that you and I sitting at home might not know. So you have us, which are considered retail traders, non-professional, and then you have professional traders. So the professionals, they have access to some of the fastest and most advanced stock data. They're using things like Bloomberg Terminal, which costs about 30,000 a year, that gives you some of the fastest stock news out there. And they have access to maybe some inside information. Maybe they know certain people or certain companies. But the idea is, in general, they just kind of understand and know things about the market that the general public does not know and will never be able to access. So the idea with Flow is that you don't have to pay $30,000 a year for a Bloomberg terminal, right? Because they pay the $30,000, they do the research, they study, and then they make their trade. So you get their end result. So now you're seeing what they bought and when they bought it. And we talk about these people having millions of dollars. Now, you and I at home, we might not have millions of dollars to trade with, but that's perfectly fine because you can still follow their same trades with a few hundred or a few thousand, wherever you do have. So you can kind of think of flow as just being at school and you're sitting next to the smartest kid in class and you didn't study for the test. They did all the studying. They were up late doing hours of research, studying, study guides, all that. And you just kind of copy their answers on the test, right? So that's the kind of simplest way to look at flow through an analogy. And you don't expect flow to always be 100% correct, because at the end of the day, these are real people that are trading with real money, and they're going to be right most of the time. But just like any other trader, they're still not going to be perfect. But what you can know and can understand is that they do have high win rates. That's why they're professionals. That's why they have access to millions and millions of dollars. That's why they got hired to work for JP Morgan or Goldman Sachs or any of these other multi-billion dollar institutions. right? They're in the positions they are for a reason, not because they're perfect, but because they're really, really good. So again, they are still going to be wrong sometimes, but if you have a win rate of 80%, then you're not worried about the 20% of the time when you lose. And neither should you be if you are following these traders. So that's just kind of a summary of what flow is and why it's going to be useful to you. So I get a question a lot. Well, JT, I want to use options flow. I hear you talk about it. I see your results, but I'm a beginner. I don't really know that much. Can I use it as a beginner? Do I need to be a pro? How much time do I need to put in before I can start using flow? And I'm going to give you all another analogy. So think about options flow as a really nice car, like a Lamborghini. Real flashy, real shiny. It looks good. It's great. You understand the benefits of it. You know how it works. You see it and you say, okay, I want that Lamborghini, right? But imagine you don't even know how to drive a car. So if you don't know how to drive a car, then buying a Lamborghini is going to be useless to you because you're not going to be able to do anything with it. That doesn't mean you have to be a professional driver. You don't have to be a race car driver. But at the bare minimum, you do have to know how to drive if you're going to get a super nice car. So the same way with options flow, it's like you don't have to be a professional trader to use options flow, but at the bare minimum, you do need to know how to trade. So it's not useful to you to see, okay, this is what big money is buying if you don't already know how to open your brokerage account, make that same trade, enter the trade, manage it, and then exit. So at the bare minimum, you do need to know how to trade, which is why this is the last class in the options 101. So if you're just not watching this live for the first time, or if you're watching the playback and you haven't worked your way through weeks 1 through 5, definitely do that. I would even say you might want to go back and do that if you're watching this on a playback. The courses or the classes are scheduled section by week for a reason. So with that being said, yeah, you don't have to be a professional. You just have to know how to comfortably get in and out of trades on your own. So now that we've kind of gone over the overview of what flow is and who it's for, I want to actually start getting into some specifics on the Capital Flow platform and explaining to you just kind of what things are that you see on my screen here, and of course how you can use them to make money. So with that being said, first off, we're going to start here at the top. So you see we have these 3 boxes on the left: overall flow, call premium, and put premium. So this tells you how much money has gone into calls for the current day, how much money has gone into puts for the current day, and then that determines the overall flow. So today, a lot more money went into puts than calls, as you can see. So that means the overall flow is bearish. When there's more money going into calls, then the overall flow is bullish. And this can generally give you an idea of what the trend is going to be for the day. If you've looked at the market today, you can see it was definitely bearish. The S&P finished down, what was it? Oh, yeah, it's right at the top, 1.44%. So about 1.5% down day on the S&P. So the overall flow being bearish definitely was a solid indicator that we're going to have a downtrend today. Now, what I will say is that just because the overall flow is bearish doesn't mean the market's going to drop all day. Just because it's bullish doesn't mean the market's going to go up all day. There's a little bit more to it than that, and I'll explain here, because you see below these boxes, we have top contracts by premium. So when you click on that, these tell you the contracts, the option contracts, most amounts of money go into them for that day. So you can see right here, this was the most bought option contract today. It was Tesla 450 puts. They expire 1/19/2024. There was $1.27 billion spent on just these alone. And then you can see there's more Tesla puts, over $1 billion, some IWM 190 puts, etc. It looks like as we finished the day, there was only one call, and that was a Microsoft call for 2024. $137 million spent. So first off, understand with these are not single orders. This does not mean one person spent 1 billion on this. This is collective, the total amount of money that went into that single contract. So you can kind of look at the overall flow for the day and see, okay, this is bearish, but now I want to see specifically where is some of this bearish flow going into. You can obviously see there was a lot of Tesla, there's some SPY, there was even some Zoom up here. So typically you're going to see the same names up here, kind of the biggest names across the market. SPY will be up here a lot, QQQ, Apple, Tesla. If there's a company that's reporting earnings, that might be up there a lot. We are in earnings season. So if you're using this during earnings season, you'll see a lot of names that are reporting in the near future. Or maybe they reported previously and people are looking to play a post earnings move. So the way that you want to kind of break it down is by starting with the overall flow. Okay, you see it's bearish. So that means I'm expecting to play some puts. I want to look for some downside setups. You can say, okay, well, where exactly is some of that money going? You can see a lot of it is going into Tesla, for example. So say now, okay, so between the overall flow being bearish, I see a lot of it is going into Tesla puts. Now you want to come down here to filter by symbol, and you can choose the stocks that you actually want to see the flow for. So we talked about Tesla. So boom. So you can actually search multiple at the same time. It doesn't have to be just one, for example. But for the purposes of this, we're just going to stick to Tesla. So now once you scroll down here, these are all the Tesla trades coming in real time. So you can use now this filter by premium, and you can set your minimum premium amount. And I'm going to explain to you how to do that in a second. So I already have it set at 100K. So now anytime somebody spends $100,000 or more on a Tesla trade, it's going to show me here in real time. So the most recent one, this is today, 10:25 at 3:59, right before the market closed. This is the time that the order came in. The symbol is Tesla. This is the contract that was bought, 420 puts that expired 3/15/2024. Obviously, all the puts are in red, the calls are in green, just kind of make it easier for you. You have the premium, which is how much money that they spent. Remember, my minimum premium is at 100,000. So all of the premium orders are going to be 100,000 or more. This one was right here, 103,640. This is the price of the contract at the time it was purchased, and size is how many contracts they bought. So today on 10/25 at 3:59, someone placed a Tesla trade. They bought 420 puts that expire March 15th, 2024. They spent a little over $100,000. The price of those contracts was $207.28, and they bought 5 of those contracts. So that's how that works. So when you're looking at these orders, you don't just want to see, okay, there was one big Tesla put order. Let me go ahead and follow it. You want to look for what's known as repeat flow. So repeat flow means that not only one order, one large order, there's multiple. And this is already a good example here. So you can see there's not just one large Tesla put order, there's multiple, because right before that, these are pretty much all at 3:59, it looks like. So these are all consecutive back to back. So that's what you want to see with repeat flow. You want to see consecutive orders coming in with large amounts of money that are in the same direction. So all of these are 6 figures and up. All of these right here, right at close, are Tesla puts. There are some calls in here. It's never going to be 100% puts or 100% calls. There's always going to be somebody on both sides, but you want to be on the side that has more firing power, right? So just by looking at this, you can clearly see that the bears were in control of Tesla going into the close. There was a lot of money coming into Tesla puts. And just for a quick reference, we can look at Tesla's price action. Excuse the indicators and things like that, but you can already see, right? So right here, right at close, they're buying a lot of puts. There's a lot of money going into Tesla puts, and you can see down or after hours, it looks like it's already moved from 213 to about 207. So it's already dropped a lot after hours. So that just is a really solid indicator of how you can kind of catch some moves, some overnight moves, right? Looking at the flow right at the end of the day. And we're going to talk about different moves that you can find. Before I get into the rest of these features on capital flow, I want to talk about the minimum premiums, because something that comes up a lot is a lot of people say, well, what do I set my minimum premium at? Should I be looking at orders at 10K and above? Should I be doing 25? Should I do a million plus? And the answer is it's going to depend on what you're trading and the size of the stock that you are trading. What I mean by size, I mean the market cap. So there's different market caps, and I'll break it down for you. so that you all can understand, because for me, what I trade, typically I'm trading large cap or what you would call mega cap stocks. But there are different ones, there's different levels. So I'll break it down for y'all. And this is something that y'all can write down. So if you are trading what's known as a micro cap stock, also you might hear these called penny stocks a lot. So these are companies that have a market cap $250 million. And if you ever don't know a company's market cap, you can just Google it. You can Google Apple market cap, Tesla market cap, right? So if you're trading something that is what's called a micro cap, penny stock, something small, a small company, the smallest it gets, that's under $250 million, then your premium should be anywhere between 2.5K to 10K, because there's not going to be millions and hundreds and thousands of dollars going into these penny stocks a lot of the time, right? They're small for a reason. A lot of the big money traders are not focused on them. Now, what I can say is if you're trading something that's small and you do see a 6-figure order, a 7-figure order, in those cases, it might be beneficial to follow that, even if you only see one, just because it's super rare to see that. Now, if you see a $1 million order on Tesla, a single one, that's not that big of a deal. You can see just with one contract over $1 billion went into that on Tesla. But on names that typically don't have a lot of flow coming in, you want to stay between 2.5 to 10K, because there's going to be a lot of smaller orders. So you want to be able to catch some of those smaller names on there, right? Now, if you are trading a small cap stock, that's one step up from micro cap. So a small cap is a company that has a market cap between $250 million to $2 billion. So 250 M to 2B. Now you can use 10K and 25K. So these are a little bit bigger. There's a little bit more money coming into these. Again, not necessarily hundreds and thousands or millions, so you don't need to go here yet. But small cap, you're between 10K to 25K. Now, for mid cap, the next step up, mid cap is a company with a market cap between 2 to 10 billion. Anywhere between 2 to 10 billion is considered mid cap. For mid cap, you're 25 to 50K. The next step up after that is large cap. So large cap is anywhere between 10 billion to 200 billion. So for large cap, you're 50K to 100K. Now, mega cap is anything that has 200 billion or more. So for mega cap stocks, that's your Apple, your Tesla, your Amazon, the largest companies, the ones that we kind of talk about a lot, right? The ones that you see talked about a lot in the group. Those are mega caps. And for mega caps, you should be 100K or more. You really don't want to be under 100K for mega caps, because if you see something like Tesla, you know that there's billions of dollars being moved around from Tesla. A $20,000 Tesla order is really not a lot, right? And $20,000 might be a lot for you, might be a lot for me. That's all relative. But when you think about the total amount of money being moved on some of these Tesla trades, a $20,000 trade is not much. You really don't want to be looking at anything under 100K. So you're 100K, 500K, or a million. So that is how you set up your trade filters. Again, just depends on the market cap of what you're looking at. So for me, for a lot of the things that I trade, I don't go under 100K. Now, there are some mid cap, large cap names I trade, like Roku. Roku is one that I like. I might be 25K, 50K. I don't really do a lot with penny stocks. It's not my thing with those micro caps. But if you are into those, you can still use capital flow to find good opportunities. Just don't expect to see a lot at 100K plus. You know, that's where you want to stay in the kind of smaller ranges. So with that being said, now I want to transition into some of these other buttons that you see right here. So this just means I'm seeing all the Tesla orders. So we'll put this back at 100K. So all means any Tesla order where someone spends over $100,000, I'm seeing it here. Doesn't matter what expiration, doesn't matter what kind of trade it is. It's they spend over 100K or more on Tesla. I see that here. So now you see we have an unusual button. So there's 3 different type of unusual trades. So we have large, we have block, and I want to see if we can find an example. We have sweeps. So we have sweeps. There's no sweeps on the page, but I'll talk about them. So large just means, and if you ever forget, you can hover over these and it gives you a quick definition. So large just means anything with 100K or more, right? Anything that's over 100K is going to be labeled as large. Blocks are privately negotiated transactions that were placed outside of public exchanges. So, in other words, if you see something that's labeled as a block, you can kind of expect that to be coming directly from an institution. These are not people sitting at home trading on their phones or their laptops. Block orders are coming from institutions. And you have sweeps. I don't want to waste too much time scrolling to find an example of a sweep because typically sweeps come in earlier throughout the day, is what I've noticed. But you will see a third one that's just sweep. It's labeled as sweep or unusual sweep. And sweeps are just large orders that were broken up into smaller orders. So, say instead of placing $1 million order, they broke it up into 10, $100,000 orders. And the purpose for that is because you can get filled faster. It might take a little bit longer to get filled if you're placing a super big order. So sweeps are actually really interesting because the reason why people get in sweeps, like I said, is because they want to get in that trade quicker. They don't want to wait. So if you see sweeps coming in, that means that typically there's going to be a big move coming in soon, because if they're in a rush to get in, they might even pay a little bit of a higher premium. But if they're in a rush to get in that trade, that means you can expect a quick move. So a lot of times, like I said, you'll notice sweeps come in at the open, right when the market opens. So kind of right there at 9:30, if you see a lot of sweeps coming in, that means that whichever big money traders were placing these sweeps, they didn't care. They didn't wait for candlesticks to form. They didn't care about what news dropped. They didn't care about what levels we were going to touch. They said, I want to get in this trade right now, immediately. That's when you can typically expect those aggressive moves. So typically what I notice after a sweep, so for my day traders, so for my scalpers, when you see those sweeps, those are usually really good opportunities to catch a quick move if you can catch them in real time before that move. So we also have a few buttons over here, right? So we have some expirations. So we have weeklies. This will show you any expiration that expires within that same week. So we'll turn off the unusual for now. So now I have it Tesla with my premium spent at equal to or greater than $100,000. And I have my expiration set to weekly. So now I'm only going to see Tesla trades over 100K that expire this week. So now you look at the contract spots, you can see now they're all 1027. So a couple of things to understand about this weeklies filter. This is really useful for day traders. Now, obviously, if you're a day trader, you don't care about flow that expires in 2026, right? Because there's a lot of time on those. When someone buys something within that same week, they plan on exiting it a lot sooner. They're kind of anticipating a quicker move. So the weeklies filter is really great for day traders because you want to catch some of those moves that are going to happen within that same day. Now, what I can say is be careful with this weeklies filter as we get later into the week in the second half. So me personally, I mostly only use this weeklies filters on Monday, Tuesday, and Wednesday, because what I've noticed is in the second half, late in the week, Thursday, Friday, a lot of times big money will start going next week, even for their day trades. So for example, say it's a Friday and you're watching SPY. Right. So say you're looking at SPY trades on a Friday that expire this week. You might see, say, $10 million come in, do SPY puts on that Friday, right? Because at that point, weekly is only going to show you same days if it's already Friday. So you might see $10 million go into same day puts on SPY. You're thinking, okay, SPY is going to drop. But a lot of times what big money will do once we get late into the week is they will start buying next week's contracts. So there might be $10 million going into that Friday expiration. Meanwhile, that Monday expiration, there's $50 million going into calls. So if you're only looking at the same day, then you're not going to see that. So the weeklies filter is really useful, especially in the beginning of the week, but just kind of be careful with it as we get late into the week. I'm not saying you don't have to use it. You can still use the weeklies filter if you're looking for day trades on Thursday, Friday, but it's also beneficial to kind of zoom out and just make sure you're not missing out on any important trades that might be coming in on the very next trading day, which would be that Monday if you're thinking about SPY, QQQ, or even next Friday if you're thinking about names that don't have everyday expiration. So that's the weeklies filter. We also have the swings filter. So the swings filter is going to show you expirations within the next few months, because if you're swinging, you're looking at trades where people have bought a little bit more time, right? So those same days, same week, those aren't really too interesting for you if you're swinging. Now, obviously, there's different lengths of swinging. You can do short-term swinging. You can swing for a few days, a few weeks, a few months, whatever you like to do. So this is going to be for you if you're swinging, not only to find entries, but just to kind of manage things, right? Because if you're trading something for a few weeks, a couple weeks, say 2, 3 weeks, you still need to manage that trade over those few weeks. So say you're looking at a swing, you consider an entry, you can check the swings filter to see if something within that same expiration date is coming in a lot. Again, remember, you're looking for that repeat flow, and you can find your entry using the swings filter, and to also just kind of give yourself confirmation on whether or not you can expect that move, so you can continue. It looks like the flow is still good on this swing, it's still good, it's still good. Or you might see, okay, well, I'm in this swing, but now it looks like the flow is going against me. I might need to go ahead and set a stop loss, be prepared to exit, things like that. We also have the leaps. So leaps are long-term expiration options. So anything that's kind of like 6 months and out is considered a leap. Um, I personally don't do a lot with leaps myself, just because I like to day trade. I like being active in the markets. I like to kind of get in, get my money, call it a day. But I know some people like swings, some people like these longer term swings. So the leaps are for you, kind of similar to swings. You can use them to manage, to find entries, and just to kind of manage things. So you can see now the expirations are all 2024, 2025, longer term expirations. So that's how you go about setting the filters. And again, like I said, you can use multiple in here. You can QQQ, Tesla, Amazon, Apple, right? Whatever you want to see. And then we'll take out spine QQQ for this. So now you see we've got in the symbols, you see we've got some Apple, some Tesla, some Amazon. So, if you want to watch multiple names at once, you can do that also. It doesn't have to be just one. So with that being said, I want to kind of break down how I go about finding a trade. And I kind of already did this, but I talked about a few things in between. So if I'm starting the trading day at 9:30, 9:45, 10 o'clock, whatever, close to open, right around open, the first thing I'm doing is checking the overall flow, because that's going to kind of give me an idea of the direction that I want to play. Again, not just saying overall flow is bearish, let me hop in puts, but I say, okay, overall flow is bearish, so now I want to look for some put setups. So I see overall flow is bearish. Now let's open up the top contracts to see exactly where some of that bearish flow is going into. So again, today we see a lot going into Tesla put. So I say, okay, it's bearish. It looks like a lot of that is going into Tesla. And again, be mindful of the expirations on here, because there's going to be different expirations. You see some of these Teslas are 2024. We've got some IWM for 1215, 1117. It looks like a lot of these trades are either 1117, 1215, or 119 for 2024. We do got a couple Tesla weeklies though. So just seeing these weeklies, right? These would have me interested in a day trade. Now, if everything is 2024, 2025, then in that case, I might need to wait a little bit before finding a trade. But if I'm looking for a day trade, I see, okay, there's a lot of Tesla puts. Some of them are farther out, but we do have some short term, some same weeks. So I say, okay, now let me look at Tesla. So we go to filter by symbol, we type in Tesla, and we go to the trade filters. Remember, Tesla is a mega cap, so I'm not going under 100K. I'm going to go at bare minimum 100K. We can even do 500. We can do 1 million. Let's just do 1 million for this. So say I'm only interested in Tesla trades where someone spends $1 million or more, and I want to use weeklies because I'm looking for a day trade. So now at this point, I'm looking for a repeat flow to come through. So off rip, you can already see there's millions and millions of dollars going into these Tesla weeklies. There's a lot of money. You can even see right here, 14 million, 17, 38, 30 million plus. So I'm seeing a lot of money go into Tesla weekly puts. So now we can talk about combining flow with the charts, because I know what I want to take, because I see the overall flow is bearish. I see a lot of it's in Tesla. I'm seeing a lot of money go into Tesla weekly puts. That doesn't just mean I open up my brokerage and dump a bunch of money into Tesla weeklies, because timing still matters when you're following the big money. And timing matters because they move a little bit different than you and I, because they have access to what you can basically consider unlimited amounts of money. So when you have unlimited amounts of money, for them, a lot of times they're not concerned about getting the exact perfect entry. A lot of times they'll enter and it'll move against them. They'll have some drawdown. But when you have access to essentially unlimited amounts of money, then you can average down unlimited amounts of time. So that's what they do a lot. A lot of these orders are initial orders. Some of these are just adding to positions. They're averaging down, because they just know that move is coming. They're not really necessarily trying to look at the charts and find the exact reversal or find the exact breakout. They say, okay, Tesla is going to move down. Let me get in Tesla puts. If the trade moves against me, I've got plenty of money to average down with, right? But for us, we don't have unlimited amounts of money. So timing does matter. So you need to be able to time the entry. So that's where we talk about combining flow with the charts. Now, the simplest way to think about that is just using key levels. You need to understand key levels, and that's really all you need to understand to combine flow with the charts. Now, key levels, they can be different things. They can be your basic support and resistance lines. They can be supply and demand. They can be pivot points. They can be Fibonacci levels. And these are all different things that were talked about in previous weeks. So if this sounds kind of foreign to you, again, TJ did a great job. He talked about supply and demand, talked about pivot points. So these are things that you need to understand, these key levels, when it comes to combining flow. So let's just say you're using basic support and resistance, right? So you look for one of two things. So if you're looking for puts, so like this example that we talked about, you see that Tesla's going to go down. You want to time an entry for Tesla puts. You look for your nearest levels of support and resistance. So if you're looking for Tesla put entry and Tesla is moving, then you would look for the nearest resistance level and you would wait for entry when it rejects off of resistance. Now, if we're already in the downtrend and you're looking for Tesla puts, you can look for the nearest support level and wait for it to break below support and continue dropping, and that's your entry. Now, of course, you can kind of manage that different ways. Like if you want to be extra safe, you don't just you can wait for a breakout and a retest. And it's vice versa for calls. So say flow is bullish, there's calls coming in, you're looking for a call setup. So if you're looking for a call setup while the stock is moving down, then you would look for a touch of the nearest support, and you look for a bounce. Now, if you're looking for a call setup and the stock is moving up, then you would look for a break of resistance to the upside. So that is essentially how you can use flow to find opportunities in the market, to find trades. And again, like I said, this is something that I've been using every day for a long time now. I personally don't even take a trade unless I see that there's flow coming in, because you can look at the charts and things might look good for an upside move, things might look good for calls, but you can see, okay, just say you're not looking at flow, you're just looking at charts, and you see something on Tesla that makes you think, okay, Tesla's going to go up, let me play Tesla calls. But you look at flow, you see there's billions and billions of dollars going into Tesla puts, and that's just today. Now, you, with whatever amount you have, say you have a couple $1,000s, you don't want to put your $2,000 against $2 billion just going into puts, right? Because at the end of the day, somebody's going to make money, somebody's going to lose money, and you just want to be on the side that has more firing power, right? So that's how you would kind of use capital flow step by step to find some trade setups. And there are a few other features I want to talk about real quickly, these trade alerts, because these are super useful and these are underrated. And if you're in the Discord, which of course you all are, then you see we have a channel for these. So these, even without being on the Capital Flow site, you actually still get access to trade alerts. It's in our bot channel. So these do come to the Discord. And if you're on the site, there is a kind of a link to a video. I just talked about this a little more. But I'll break these down for you. So trade alerts are the repeat flow. So like we talked about, when you see large amounts of money going into the same trade, same direction for something, that's repeat flow. So trade alerts are super useful. And I know personally, there's a lot of people who use capital flow and they don't look at the real-time trades, they don't set the filters, they just look at the trade alerts and that's it. They want to say, okay, these are the things that I'm following. And again, just like everything else, these are not going to be 100%, but these show you when a certain option contract is getting bought multiple times consecutively with large amounts of money, like we talked about looking for on the real-time orders here on the left. But if you just want to get alerted instead of watching or waiting, you can follow the trade alerts. Now, the trade alerts, you don't get to control what names that you see. You're going to see, again, kind of a lot of the same names will typically come through the alerts. You'll see SPY, QQQ, Apple, etc. And again, we are in earnings season. So in general, just a general rule of thumb, it can kind of be tricky to use flow during earnings season because different names are reporting. So there's some speculation, there's some guessing, a little bit, not necessarily guessing, but just more so speculation about how earnings is going to perform. So it's not always necessarily a straight directional trade. Some people might be playing both sides if they expect a big enough earnings move. Some people might be getting into calls and puts at the same time. So that's just something to kind of keep in mind every earnings season. But like I said, these will let you know when something is getting bought multiple times from big money traders, and these are really useful. I just kind of want to give you some general things to understand about these trade alerts. So again, you all can write this down. So first, just understand that when you see these trade alerts, these are not one trade from an individual. Like I said, this is repeat flow. So that means this Meta 300 call, this is getting bought multiple times. This is not a single person buying this trade. When you see SPY or SPX alerts come through, sometimes these are tricky because they can be scalps. So they can't, a scalp is just a quick move. So these could be people planning to get in and out. So keep that in mind if you see some SPY or SPX. Also, when you see alerts coming in near the close, typically that means somebody might know something for an overnight move that's coming, right? So another thing you'll see on here a lot is alerts. Typically, when you see IWM alerts, that is an indicator that volatility is about to increase. Also, remember that since alerts are triggered by traders with a lot of capital, of course, they can afford to, again, buy time and average down when necessary. So, like we talked about, you want to combine this with trends and support and resistance as confirmation. Short dated out of the money trade alerts can indicate that a potential squeeze might be coming soon. If you've been in the group and active and paying attention to some of the signals that I put out, I talk about this a lot when you see that short dated out the money flow coming in. I've even got some recaps on my YouTube because when I catch those, like I said, those typically lead to a squeeze, which is an aggressive move to the upside. So when you catch those, whether it's in real time here on the left or through a trade alerts, when you see some short dated out of the money flow, that means you can kind of expect a quick aggressive move and be able to make some great money on a day trade. So the flow alerts, on average, you can expect a minimum of kind of 10 to 20% return if there's a just on average or in general, you can expect minimum 10 to 20%. Now, if we're in a good trending day and the market is trending, they can give 100% or more, but these are less frequent, the 100% plus. So you got to keep in mind that these big money traders, they have access to millions of dollars. So they're not always looking to make 100, 200%. You can make 10 to 20% on a $20 million trade, and that's somebody's yearly salary. So perspective matters when you're following these flows. Flow alerts are, this is already covered. So sometimes these alerts can play out pretty quickly, fairly quickly. You might see alerts come in and you see the stock move a couple minutes after that, immediately after that. Sometimes it takes a little bit. Sometimes it might take a little bit of time. So just understand that you need to be patient, especially if the market is choppy. The alerts might be coming in anticipation for a move after the chop, but the chop could last for a while. So patience is key a lot of times when following alerts. And again, just understand that the best way to follow these alerts are by combining them with technical analysis. A lot of times the chart can show you why an alert was even triggered in the first place. So like it may have been at a key level of support or resistance. So outside of that, We have a couple more features. These are just kind of some basic charts, some ETF charts, QQQ, IWM, some line charts. We're going to expand more on this in the future, but for now, you can see it's basic line charts. Economic calendar here. So a lot of times flow is coming in based on economic events. Say Jay Powell is about to speak. There might be a lot of puts coming through, right? Or jobless claims are about to come out, or different type of inflation data is about to come out. These are things that can cause big money traders to either go in heavy on calls or go in heavy on puts. So it is useful to keep up with the economic calendar, right? You'll get a name that tells you what's happening, and then you can just click the arrow, and get a quick description of what the event is. So the economic calendar is. So that concludes for now my summary of capital flow, how you can use it to make money, what flow is, how it's useful, how to find trades. So before I get into questions and feedback from y'all, last thing I will add is, again, capital flow is my personal flow service that I launched. The team has been doing a really great job. If you've used Capital Flow in the past, if you've been there from day one, or maybe you used it before and haven't been on it lately, you can already see there's a lot of improvements. There's been a lot of updates that came out since we first launched that beta. For those of y'all who are the team is always working on making some improvements. We've got a few things in the pipeline right now that I'm really excited about that we're going to start rolling out going here closer to the end of the year. So if you ever have any feedback on the platform, definitely feel free to share it. Just shoot me a message. A lot of the updates and features that you see on here now are things that were just requested by y'all. So this platform is built for y'all, so y'all have an input in what you would like to see. So I always love hearing y'all's feedback. And lastly, I will say, Capital Flow does come with a little bit of an extra fee just because it costs money to put the systems in place to gather this data. So there is a fee to get on Capital Flow. Like I said, the alerts are included with the group, but if you want access to the actual platform itself, the normal price is $35, but if you're already in the Impact Investments Discord, like all of you are, the price is $29.75. So it's literally right around $1 per day to get access to Capital Flow and see where millions and billions of dollars are being moved around. Definitely well worth the investment. I guarantee you, if you're watching big money, following the flow, you're gonna make more than $30 a month. It's super light. And keeping this affordable was important to me because, like I said, I've used a lot of other flow services throughout my trading career, and a lot of them are just super pricey. So I wanted to make something that was affordable, that was effective, and that was useful. And I feel like we definitely got that with Capital Flow. I get really happy seeing y'all's feedback and seeing that y'all are just liking the platform and using it. So if you want to get started, the website is capitalflow.app. Again, since you're all already in the group, it's $29.75 a month, and it comes with 1 week free trial. So I would definitely encourage you all to just start a free trial. Just spend some time on it for a week. Look at it, monitor flow, monitor how the market moves based off what you see on the flow. Just kind of see what you think, see if you like it. Worst case scenario, you don't like it or you decide it's not for you, you can cancel and not have to pay anything. But I do encourage everyone that's on this call just to start a trial, to at least just give me some feedback. I can see you about this all day, but what I really want to see is you all take action and execute on your own. So start a trial, spend a week just looking at it, monitoring the market, monitoring flow, see what you think, see if you can use it to maybe find some trade setups, some opportunities, and just kind of let me know what you think. I really just want feedback at the end of the day. Even if you make a trial already having in mind that you're not going to use this, that's perfectly fine. I would just like for you all to check it out yourself and just give me some feedback. So with that being said,